Listed on both the NYSE and the TSX, Shopify is known as one of the fastest growing tech stocks. Fast forward to today, and Shopify has lost 53% of its TSX value and 45% of its NYSE value in only the past 6 months. So, knowing of the previous success of this company and its share price, should you become a shareholder, or are you better off sitting this one out? Looking at the market as a whole, the Dow Jones has risen 2.3% in the past 6 months. Although this would have been surely negative if it weren't for the gains seen during the March 14th trading week. So the market hasn't performed great, but it's nowhere near as bad as Shopify. So let's take a closer look into some similar stocks to see its relative performance. So in the same 6-month time frame, Walmart shares have risen 1.9% and Amazon has lost 3.9%. Still, these stocks didn't perform well because of the ongoing Ukraine crisis, but why has Shopify been hit way harder than the rest? Shopify's product peaked during heavy COVID restrictions as brands and sole proprietorships turned to Shopify to keep up an evolving market. So as COVID began to lessen in many parts of the world, the hype and the demand for Shopify has seemingly lessened as well. Going back to October 27th of 2021, Shopify reported poor earnings, posting a 0.1 EPS compared to the forecasted 1.23. This is a 28% loss from this time last year. Now, despite this loss, Shopify would actually see its stock climb for around 2 weeks before hitting its peak. And moving forward to the next earnings report on February 15th of this year, Shopify beat estimates and posting a 1.36 EPS over the forecasted 1.30. Although this was not a great sign of success, considering it was still down 14% from that time last year. And without any significant growth from these earnings reports, Shopify, along with many others, were taken down in value from Russia's invasion of Ukraine. One of the biggest, if not the biggest problem for Shopify is their price-to-earnings ratio. In the minds of many, Shopify was and still may be too overvalued if you consider this ratio. While the stock initially grew quickly and saw great success, long-term investors may see this as a cause for concern. In order for Shopify to see long-term success, it will have to maintain its rate of growth and continue to expand its reach in the e-commerce market. The question for many is if Shopify will ever be able to see the similar surge in users provided during the pandemic. With continued uncertainty in the market and Shopify's unclear direction, most traders would need to see the start of a true bull market before they invest into Shopify. Although metrics like US jobless claims have returned to more previous levels, and much of the Ukraine-Russia conflict can be considered factored into the market, rampant inflation is still a massive threat. Today, for a stock such as Shopify to succeed, it will likely not only need to have good company-based metrics on its side, but also a growing market to support it. Now, this is all just speculation, and you'd be crazy to believe if Shopify has no chance for growth. On this day, to reach previous highs, there's over a 200% return. Now, of course, this is no guarantee, but there's still great potential in Shopify. As markets begin to settle, we're already beginning to see the return of oversold tech stocks, with companies like Meta, Tesla, and Roku making big returns. Over the past week, Shopify has risen 23%, but the company still has a long trek back to the top. So let me know what you guys thought of this video. So it was pretty quick and just a little overview. I'll make sure to include some sources in the description if you guys want to do some reading of your own. And really, the choice is yours here. Again, this is an overview video. If you have any comments and how I can improve and maybe your own thoughts on Shopify, I'd love to hear it. So I'll see you in the next one.